The bull flag pattern, probably one of the most common patterns that you're going to see throughout your trading career. It is a bullish continuation pattern, and it can be found on any time frame. Bullish continuation pattern meaning that the prior trend leading up into the pattern formation must be bullish or up. So initially, you're going to start with a stock that is uptrending, and then you will see a pullback against that uptrend. This uptrend is your flagpole, and your pullback against the flagpole is the flag itself. Now, what you'll notice a lot of times during the pullback is that you're going to have a series of lower highs as well as a series of lower lows. You can identify that with two parallel trend lines. That's those two red parallel lines that you see on my screen right here. And eventually, this pattern works when you get higher highs out of the pullback formation. So looking at the pattern, it looks like a flag that is blowing in the wind, hence the name bull flag. Now, there are a couple of ways that you can take a trade on this pattern. The first way that you could take a trade on this pattern is at the break of the downtrend trend line right here. So the moment that the stock stops making these lower highs and begins to make higher highs. This way of entry is going to give you the most confirmation, but you do miss out on a little bit of profit margin. So there's pros and cons. The pro of this entry method is that you miss out on profit margin, but you have confirmation that the trade is actually breaking out and giving you higher highs. The other way to enter a trade on this setup would be to take an entry on one of these dips near the bottom trend line. In this way, you're taking advantage of a lot more profit margin. So in the event that this does break out, you have more profits, but it's riskier because there's no guarantee that when you take the entry at one of these lows, that it is actually going to bounce and that it is actually going to break out. So the pro of entering at the bottom trend line is that you're taking on more profits in the event that this actually does break out. But the con would be that you're taking on more risk because there's a chance that it breaks down. Now, just because a pattern is a bullish pattern doesn't mean that it has to break out. As I stated earlier in the video, this is one of the most common patterns that there are out there, and I can find examples for you on this all day. Here's a bull flag right here. Notice the pullback in price against the initial trend, which is up, and then the continuation up to the top side. On this same chart, here's another bull flag here. Notice the pullback in price against the initial trend before you get the continuation up. Here's another bull flag right here. Notice the pullback in price against the initial trend before the trend up. All that I have for you on bull flags, it's a very easy and simple pattern to recognize. The biggest things to keep in mind is that it has two parallel lines pulling back against the initial trend, which must be up. And you get confirmation that the pattern is breaking out the moment that the stock stops making lower highs against the trend and begins to make higher highs. I do hope the videos help. Take care, and I will see you in the next one. Cheers.